afternoon. It's Tuesday, May 20th, 11 after 4 Eastern. I'm an associate member of T3 Trading Group, which is a SEC registered broker-dealer and a member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure there is pretty much the same. Is anybody out there? Usually somebody says good afternoon or hello or what's up. There we go. All right, so you guys can hear me. Cool. So, can you believe it? We had a negative day, kinda. I mean, red is red. We're 60 cents off below where we closed today, to be down about 0.4% with the SPYs, 0.5% for the Qs. They've also pulled down from where they closed, and the IWM actually closed green. But yeah, it was kind of another day. We did break our streak, so I think we were 6 green days in a row, and just wild amounts of extension. So today was technically a negative day, but when you look at the daily chart, it's just an inside day. It's hard to count this as any sort of a victory for bears at all. The levels I mentioned to pay attention to in the morning meeting today were basically yesterday's high and yesterday's low. Above the high from like the last 2 trading sessions, you're breaking out again. But on top of that, the data that we were looking at in the morning meeting today, just the gamma flow, really shows that there is like gamma squeeze risk to the upside if we're able to really break higher, if we're able to break above the highs from the last couple of days. On top of that, we know that CTAs over the course of this week, so now we're 2 days through this week, but over the course of this week are buying like $13 billion worth of stock on a flat tape. And the buybacks are buying $5 to $6 billion worth of stock a day right now. So there's a lot of forced buying that is still ongoing at this point in this market, though I do think as time goes by, that's going to continue to roll down, I think especially starting next week. But is that systematic buying enough to break through the highs from the last couple of days, which then could create an additional gamma squeeze on this market to propel us even higher? That's the big fear almost if you're trying to be a bear right now in this market, and it could easily happen. So today was an inside day. It's a rest day. It is a red day today, but technically an inside day today, while we didn't break above key levels or below key levels, is more of a win for bulls than it is for bears, because it just digests this extension. We've been sitting up here with, we had 5 trading sessions in a row of short-term tactical in the red. Where's Pat's note? We actually closed slightly out of it yesterday to break that streak. So short-term tactical just outside of the red yesterday. It probably won't be in the red after today's trading session because we consolidated all day and closed red. But I mean, bulls need a rest to propel higher. That's typically how markets work. Markets work in periods of expansion and consolidation over time. We've been in a wild upside expansion, one of the craziest I feel like I've ever seen, especially if you go back to where this started. It started at 508.50 in the SPYs on April 21st, and we just haven't looked back. We've barely had a negative trading session in weeks. And then today, again, it's technically a negative day, but it's like barely. And it's an inside day, so it lets these moving averages catch up a little bit. It further satisfies that short-term tactical. And the question really becomes those forces that I just went through, the CTAs and the buybacks, the potential of a gamma squeeze. Can some consolidation here bring in enough additional buying on top of that buying to break us out to make the other leg? Or the flip side of that, technically time is bullish, but I could make another argument right now that time is, I don't want to say bearish, but I could make another argument that says that time is not bullish. That argument would be, we know that as time goes on, these systematic flows right now are going to kind of continue to decrease. I really think after this week we're going to lose the CTAs. Not completely. They'll still be, small buyers in a flat or an up tape after this week, but they would be sellers in a down tape. So that's a change. Vol control, which was a big influencing force a week or two ago, I think 2 weeks ago, is still also buying, but that has become reduced as well. And eventually, at some point, we might be able to see some negative data in June or July. And that would be, if you go back to like that Charlie McElligott note that I was talking about this morning, that just for almost the entirety of the note is talking about all the short-term bull flow that I was just kind of talking about. And then the bottom part of the note here is really getting into after that squeeze happens, we could see a resumption of volatility in June, July months as we get closer to these tariff deadlines, and also as we potentially begin to see some impact of the tariffs in the economic numbers, which we can see in May numbers in the beginning of June, but I think that you'll really know for sure by the June numbers that we see in the beginning of July. And originally I thought that we would really see it in May off the May numbers, but when the Walmart commentary came out that said that they haven't even really begun to increase prices yet, they're going to probably have to soon. That's what they said in their earnings report. They said probably end of May is when we'll begin to potentially increase prices. That was the first sign that was like, oh, maybe even in the May numbers, we're not really seeing the full tariff impacts yet. And then if you look at Charlie's note says kind of the same thing. It says we can begin to see some of that impact in the May numbers, which will come out in June, but really it's more going to be like the June numbers that come out in July. So that's the argument that time technically is bullish because it creates a correction of the upside extension, but you could also point towards, hey, if we can get through this week and somehow not break through the highs of the last 2 days, then you lose some of the supporting influences that can actually enable the breakout. So that would be the other hand of the argument, if you will. So again, just an inside day today. It did still seem like at certain points that the bid was around, but we had some selling. Mainly sideways almost all day, very tight, very boring. And then we had a technical break lower a little bit after 2 at like 215, 220. Why did we have that technical break lower? It's hard to say. Part of it, I think, was just technicals, but we also were getting hit with some headlines at the same time about the fact that the tax bill isn't fully complete yet, and then Elon Musk was kind of speaking at the same time, and we had some Google headlines at the same time as well. So there's kind of a few things all at once. You can see Google getting hit down hard. That was actually slightly earlier. That was more like 120. And then Tesla CEO Elon Musk was on TV at 2 o'clock. And at first that boosted the stock higher. I didn't listen to it. I just saw a couple of the highlights that was posted in the virtual trading floor. Initially, it boosted the stock higher just to then sell down. I think he said that he's expecting to have 1,000 robo-taxis on the roads very soon. But whatever he said obviously wasn't enough. Tesla's interesting today because it actually gave 2 false breaks of 350. And Elon spoke like 2 or 3 times today. Elon was speaking around the time that the market was opening, or maybe a little bit before the market was opening, and he was saying that there's a big recovery in Europe on Tesla car sales, which we are yet to see that in any of the actual numbers when they come out. The numbers out of Europe continue to look absolutely atrocious, but he might know more up-to-date numbers than what have been reported up until now. So he said that there's a big recovery ongoing in Europe that kind of helped create relative strength in Tesla off the open. It broke through 350 just to give a complete failure of that opening momentum move. Very notable because Tesla's one of those stocks, also like Palantir, that when it starts going with momentum in the beginning of the day with volume, sometimes it fails, but a lot of the time that's the beginning of okay, Tesla just broke through 350, and now should we be considering an extension short at 365, 370, 35 minutes later? That's how this stock trades. That's how Palantir trades. But it's so notable that we had Elon Musk comment at the open that created this momentum move that failed. Then we had Elon Musk comments at 2 o'clock, was already trying to get above 350 by that point. But we had more commentary coming out at 2 o'clock that did the exact same thing. Cause it to break out, make new highs, even break that opening high, then just to give an absolute washout and actually break lows as well. So Tesla was definitely an interesting one. Tried to break out twice, failed twice, closed green on the day, but kind of weak, and it's not a great looking daily candle. So we'll continue to monitor that one. It was one of the more interesting ones today. Some of the other interesting stuff that was out there today was this CoreWeave. CoreWeave, we said in the pre-market when it was above 90, decently above 90, that maybe you could look for like the RDR short. By the time it actually opened, though, it kind of pulled back a little bit too much. It did still work at the open, and then it actually made new highs before pulling back a little bit in the close. So doji at the end of the day here. I didn't actually trade it, but one that we'll continue to monitor. And then Quantum stepping it up. QBTS with news out this morning. I said it was notable extension. It's a day 3. It's worth watching, but given the news, maybe let's wait a little bit longer and see. Just let the trade play out a bit. So I didn't end up trading that one either. I think that's all I got. I don't really have too much to talk about. It's an inside day today. We did see some presence from sellers. That was unique, but there was still enough of a strong bid out there that held the market up. So an inside day, which is neutral, but I would argue it's more of a win for bulls than it is for bears. So that's all I got. Happy to take a look at any questions that you guys might have. After hours here, we had PanW come out. They're trading down. We had TTWO announce secondary. They're trading down. So PanW is a really important stock. Interesting to see it selling off on its report. And then we also had commentary from Donald Trump coming out about the Golden Dome missile shield after the close, which at one point it might have briefly ticked down Palantir. I don't know what he said, but Palantir's now recovered a little bit. So yeah, all I got. Any questions, I'm happy to answer. Not seeing anything in the VTF for the moment. Over in the YouTube from Robert on Google. Any business update announcement they sell off? Was there anything specific from the Google commentary which is directly negative for the company? So that's a great question. I'm in Google, and I could not figure out what actually caused this sell-off to occur. I was a little bit distracted. I was in a meeting at the same time. So I don't know if anybody in the virtual trading floor has got some additional feedback on what caused this sell-off, but I just saw that they announced like a Zoom competitor or something that hit Zoom down. I didn't necessarily see that as a negative for Google. And then Google all of a sudden started getting smashed. So I actually don't know what specifically was stated that caused the selling to occur. I would assume it's related to something with search, but if anybody in the VTF has more info on that, I'd be interested in knowing, and so would Robert in the YouTube channel, because I didn't see a direct statement that was like, oh, that makes sense why Google's selling down. So wish I had more for you there, Robert. Doesn't look like anybody else in the VTF's giving me anything either, so I'll let you know. What else, folks? Any other questions, comments, concerns from David? If you see a stock has gapped up and you see a bull flag on the daily chart and the ADMA has caught up to one of the consolidation candles, do you consider that as a trade idea for the day? Yeah, typically. If so, do you enter on the first 5-minute candle to enter in? Not necessarily. Or do you prefer to see a bull flag set up on the 5-minute? Not necessarily. I like to see a setup on the 5-minute. It doesn't have to be a bull flag. And the daily is in an uptrend and no negative news as a better trade idea and to enter on the 5-minute chart. So, what was the name that someone communicated in the morning meeting today that was a beautiful bull flag that looked like it was breaking out very hard in the first 5 or 10 minutes this morning? And I remember typing it up and then I never looked at it again. Thank you. PRCH. Ooh, they failed it. That's interesting. It doesn't matter though. Like you can see here, beautiful bull flag on the daily chart. ADMA caught up to the base with an inside day at the end. I love that as a full setup. Um, Bull flags tend to continue when equilibrium catches up to the base of the flag. So you have that perfectly. I also love when the flag tightens a little bit at the end, right before the break. So, sometimes that represents an inside day. I didn't. I know this got mentioned in the morning meeting today, and I looked at it real briefly. I don't know what this stock is. I don't know what they do. I don't know if they had news today. The volume looks like it was more than technical. The volume looks like it was actually news. So I would like to know some of those other factors. But broadly speaking, it tried to break out of that bull flag today, and this is a pattern that I love. Bull flag ADMA catch up, tightening at the end of it with the inside bar. So there's a couple ways that you can buy this. You can trade the daily chart. You can basically buy the break on the daily chart, or you can look for a small time frame setup. So how would I buy this? What are the key spots I'd be looking at on the daily chart? Well, one is I just mentioned it gave a little bit of a tightening at the end of the flag, and I like that. You could just buy the high of the inside day, which is $10.76. That's an acceptable buy. The other spot to buy would be, roughly speaking, the break of the resistance of the bull flag. And unlike in a classroom setting, if I was like drawing a bull flag, I would be like, buy the break of the line. In practice, a lot of times, like trying to identify support or resistance is not perfect. A lot of times, support and resistance are zones; they're not specific numbers. So you can see for this PRCH, the resistance of the flag is basically anywhere from this absolute high of $11.35 to, I would say, probably the high of this bar a couple trading sessions ago, which is $10.85. So you've got a 50-cent range, more or less, of the resistance zone. So am I buying the breakout at $10.85? Am I buying the breakout at $11.35? Hard to say. I sometimes in that situation try to round it out to like a whole number or a round number. So for me, if I was buying the daily chart, I probably would again either buy the break of the inside day, which is $10.76, or I probably would round it to $11. Why are semis moving higher? Yeah, Nvidia is trading up. AMD looks like it's trading up. Oh, AMD is kind of ripping here. Micron is not really trading up. AMD and Nvidia. Elon Musk says we'll deploy 1 million Nvidia Blackwell AI chips at new XAI facility. There you go. Musk says merging Tesla and XAI is not out of the question. Would need shareholder approval. Musk says he plans to be at the White House a couple of days every few weeks. Okay, back over to David's question. So that's how I would buy it on a daily chart. Or you could do kind of what you're saying, which is utilize the daily chart pattern as a layer of probability for looking for a smaller time frame buy setup. And I like that a lot as well. The daily chart tells us what we want to be in and which direction we want to be in. The small time frame can tell us how to put the trade on, how to manage risk, and how to manage reward. So if I were to buy one of those breakout prices, by the way, on the daily chart, I wouldn't be using the low of the daily flag as my stop, most likely. I would still be using something on the 5-minute chart. The low of the bar in which that break occurs or the last pivot low on the 5-minute chart are both probably acceptable answers. Or you could just be looking to execute based on the small time frame. Now, small time frame, again, this thing's a failure here. I don't know if there was news or if it was just that there's enough volume on the upside that forced buyers in, that then when it failed, it forced a lot of volume on the downside because they had to puke it out. But one thing you could do, again, is look for a small time frame setup. That never manifested. The only way that you would have been able to buy this is if you were buying either, again, the break of the inside day, which would have had you be buying in the first 5 minutes, or I would have considered buying 11, which also would have had you buying in the first 5 minutes. An appropriate stop loss would have just been the low of the bar. So if you bought the 1176, you'd have about 18, 17 cents worth of risk. If you bought the $11 spot that I mentioned, then you would be taking on 41 cents worth of risk. Either way, it works enough, and this is the importance of good execution and game planning, by the way. Like, you look at this PRCH on the 5-minute chart after looking at the daily chart, and you go, wow, did this thing fail? Holy cow, did this thing completely fail? They suckered in all these momentum buyers in that first 5-minute bar just in order for it to completely fail. This is why execution is so important. This is why game planning is so important. Anybody who took this trade at the price points that I just talked about, the daily breaks, and used the low of the opening candle as a stop loss, if you bought 1076 and had $17 of $18 worth of risk, if you bought $11 and you had 41 cents worth of risk, the stock goes for $1.20 before it fails. So the only way that you could lose money in this is either if you are greedy, like stupid greedy, right? Again, I spent a lot of time recently talking about the difference between being greedy and stupid. Like I like the idea of traders being greedy. That's how you maximize reward. I don't like the idea of traders being stupid. Traders being stupid means you bought this thing for 17 cents worth of risk. It went for $1.50 and you lost money on it. That just means that you were so greedy that you didn't have a game plan in place for the things I always talk about. Covering your risk, booking some additional profit, maybe at increments on the way up, whatever. Even if you were like maximum greedy but not stupid, you should be break even on the trade if it fails. And that would be whether you bought the 1076 or the $11. So hope that answers your question there, David. Hope it helps. Robert saying that PRCH had an upgrade from $6 to $13 by Loop. Okay, so that might have put it in play. From Scholastic Pie, yesterday we noted that the funds were underpositioned on equities, and if I remember from the chart, they were overexposed right before the downturn in April, and must have liquidated during the downturn. Yes, that's correct. It seems like big funds are lagging behind the important market moves. Do you think their clients would be down significantly year to date through though the markets have recovered for the year? I see data on that every once in a while that gets posted in some of the analyst notes that I read, just on how on average a lot of the big funds are doing. And it's always an average number, and I'll be honest with you, I don't really pay much attention to it. It goes kind of in one ear and out the other because I could care less of what the performance is of other funds and other people, generally speaking. What I care more about is just what they're inclined to do in terms of buying and selling. And I honestly just don't remember, but I've certainly seen the data. And it's seen, if I remember correctly, I think that they were doing well overall on the year with the exception of parts of this recent move, basically. Where this recent move has started to act like a little bit of a performance drag on what they're doing. And that's, again, overall speaking, and I'm kind of just going from memory, and honestly, when I see that information in some of the reports, I kind of skim through it and move on to stuff I think is more impacting of my own trading and my own analysis of the market. But yeah, appreciate the question all the same. Anything else, guys? I know it was an inside day today, so a little bit quiet. I'm happy to answer questions. I'm not in a rush, but I'm also happy to end the meeting and not work as hard as I sometimes do. Going once, going twice. All right, cool. So we will end it there. Have a wonderful night, everybody. If you're watching in the YouTube, give it a thumbs up. Tell your friends. Have a good night.